Alright guys, so this is the outcome of our previous trade that we took just in our previous session. The previous recorded video, here is the outcome of the trade. So I'm going to show you exactly how we did the analysis in a replay of that video and how you can take advantage of this. So let's go back to the video. In this video, I'll be showing you exactly how I am able to make this trade entry and the simple procedure I follow in order to make this trade entry. Remember, price is in an uptrend. This is my higher low. This is my higher high. Now I have a higher low and I have a new higher high. So obviously I have done that and I have my new range. So if you look at this, there is a liquidity that was sitting here. This liquidity that was sitting here, there was a liquidity grab by this candle. This bearish candle you are seeing took away liquidity. And at the same time, there is a liquidity sitting at the upper side. There's a liquidity that is sitting there. So here, the liquidity is sitting at this zone. And as you can see, this price took away that liquidity. So we have an institutional candle at this point. So this is our what? This is our institutional candle. Now that we've identified our institutional candle, what do we need to do? We're patient enough, price return into this zone. So when price came in, let's look at our 15-minute time frame and see exactly what happened. Okay, so price does what? Price came into that zone. So you can see that this is the return of price all the way into that zone. So even on our 15-minute time frame, you can see that there is a liquidity that was sitting here. Do you see that? There is a liquidity here that was taken by this candle. So look at what happened. So when price returned, if I were to be here earlier, when I got these two candlestick formation, these two pin bar, that is when I would have bought. My buy trade would have been here. Look at my stop loss, very small. And you can see how the trade is playing out. But since I missed this on the 15-minute time frame, I just saw it on my 1-hour time frame and I decided to go in. But if I were you now, what I would do, I'll be patient enough to wait for this 1-hour candle to close before I will make my trading decision. This is very, very simple. We have liquidity sitting here. This is a static internal liquidity. So this liquidity was taken by this price and they will have that institutional candle, price return to mitigate this institutional candle. So that is how the strategy works. It is very simple and it's easy. In the subsequent video, I'll be talking about mitigation theory and you can take a. And so obviously you can see the outcome of that trade I just shared with you. So when price took this liquidity and then we'll have this institutional candle, price return back to mitigate it, we have this buy entry. And you see how price plays out beautifully well. And over here, we have an external liquidity that is sitting there. So that liquidity was taken and price pulled all the way to this upside. So now you can see how this works perfectly well. Now if you look carefully towards what is happening, we have another liquidity. At this zone, there is a liquidity that was taken here by this pin bar. So here is our next institutional candle. This is our next institutional candle. This liquidity was as well taken. So we are expecting price to come all the way down, mitigate this institutional candle, I will be on our way to the upside. So this is how exactly it works. I believe you have learned something new. Please do not forget to like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video.